Hi, good morning, everyone. How's it going? Yeah. Bad news, good news. It's impossible for me and Darius to do this in Chinese. So if we do this in Chinese, this panel will probably be 2 hours long because we'll be at the side, we'll be using Google Translate and everything. We're both from Singapore, and thank you everyone for being here. I think both of us, I think we've not been back in Taipei for a while. Yeah, for quite a while. We're gonna do this a little bit differently. So a bit of context, and Jackie and the guys, really well done for putting together this Taiwan Blockchain Week and everything. Kudos to everybody who does this. We will, 你们是不是要我给你们拍照先 then 你们 after 我等下再等也可以的. So anyway, so Darius and I actually have known each other for a while. Actually, Darius is one of my first friends. So we're going to do it a bit differently. We're going to introduce each other. We probably don't know as much about what we each other do because we're friends first and everything. Anyway, everybody, Darius said, if you actually, he's going to hate me for saying this. If you go to Google right now and you type Crypto Godfather Singapore, his face will come out. It's an article from him, literally. He's one of my oldest friends in the crypto space, not just Web3. He's also probably one of the most respected traders right now in the industry when it comes to crypto options. Not only that as well, but I think QCP as a brand has also invested in many early stage projects, and even to this day, they have kind of like a P&L venture arm as well. And they are also an investor and a shareholder in things like Darius that everybody knows that's derivatives, right? So options and everything aside, Darius himself has also been very, very much involved in the ecosystem, whether is it consulting via MAS, which is the Singapore equivalent of a central bank, as well as very involved in the ecosystem in general, not just in Singapore as well, but basically crypto as a whole and everything. Did I miss anything out? No.
Hi, good morning, everybody. Just to tie it up, I think QCP Capital is a crypto trading firm based in Singapore. We help clients, execute institutional strategies and trading solutions. And we as market makers and leading market makers in the space, we provide direct access to spot and derivatives liquidity. And like Gabriel said, I've known him for a long time, and he's had a very interesting path in crypto as well. He used to be the person behind a lot of the earlier crypto events back in the day. And then he jumped from one side to the other and joined the regulator, MAS. And now he's with an NFT project called ARC and building the community there. Did I miss anything else?
No. Yeah. So basically, ARC is an Asia project. We are founded by 3 founders that's been in the space for a while. We are membership NFT gated. So when people ask us, are we an NFT project? I'm like, yeah, well, yes and no. We are membership first.
If you're in Taiwan, you should mention one of the founders is JJ Lin. No?
Yeah, one of our founders is JJ Lin as well, right? Who unfortunately cannot be here because he's preparing for a concert in KL. So yes, why don't we get on to it? So what are we going to talk about today? Web3, state of Web3. It's not good. I'm just gonna be freaking honest, man, guys. It's not good. But there is one word. How are we gonna describe what's your feel and your sentiment about Web3 and everything?
I think this year has been shocking.
Shocking is the word.
To say the
least. Break
it down. Everything that could have gone wrong went wrong this year.
Meaning that it's still probably gonna get worse.
So I mean, most of the players that you thought were either too big to fail or were trustworthy, they messed it up this year, right? So it started, of course, earlier in the year or rather the first 3 quarters of the year with credit crisis. So I think that's the best way to describe what happened. Credit crisis triggered by Luna and UST, which was one of the biggest ecosystems in the space. So that was a lot of leverage being unwound and created cascading effects on everybody who had credit risk, starting with 3 Arrows and Babel and Hodnot, and it was a proper credit crisis. The space moved from $3 trillion in market cap down to about 1 trillion. So you see that there's the leverage being washed out first layer, and I think that was still manageable. So by August, September, everyone was absorbing that it was a credit crisis, and everyone was still trying to manage it. And then you get the end of the year, you get hit by the biggest bomb of all, which is FTX.
Yep.
The exchange that had raised billions of dollars and everyone thought was too big to fail, failed. So literally everything that could have gone wrong has gone wrong. But we're all still here, so that's a good thing. I think there are still some landmines in the space, the biggest of which being Genesis Lending and Digital Currency Group. But I think the interesting thing for me is that even with, if you saw the announcement by Genesis that they were defaulting on their loans, Bitcoin and Ether prices didn't move. I expected it to move.
Everything to drop.
I expected all hell to break loose. But when they announced, and then in fact it went up a little bit. I was like, okay, that means that the leverage has been washed out. So we are in the middle of a reset of the entire space, right? And a lot of the use cases that have emerged in the last 2 years are still going on. NFTs, GameFi, DeFi, these pieces are still moving along. It's just that the core leverage, credit, and trading parts of things have taken a big reset.
So 2 follow-up questions. Number 1, there is still an increase in adoption, regardless, right? I think that's what we see. So one thing which we spoke about was kind of like using internet adoption from the early 2000s, right? Obviously, a very popular business analogy is Metcalfe's law, number of users versus times number of transactions in a chart. And if you look at where crypto, blockchain, whatever we want to call it, is going, there is an exponential growth regardless of everything that's happening in the market. In fact, despite all the money leaving exchanges because people are safekeeping their own assets, you still see a great increase in accounts being generated. You see accounts being created, MetaMask wallets, all-time high. Number of wallets anywhere in the world open, also all-time high. You've suddenly got cities such as Thailand, out of nowhere, probably have one of the largest volumes in Asia when it comes to holding NFTs. Even though some of them may be shit NFTs, but the fact of the matter is that still there is a huge adoption. Very, very different from say what we saw in 2018, 2019. That really felt dead, right? Like, and no disrespect, but like trying to do this in 2018, 2019, like nobody cared, right? You couldn't do a blockchain week in 2018, 2019. Fast forward, it's a very, very different game.
Yeah, I think if you take a step back in the space, or rather if you go talk to the man on the street, crypto is no longer a fringe topic, right? It is the mainstream. People are talking about it. The uncle, auntie on the street, you talk to cab drivers, you talk to bankers, you talk to anybody. Crypto is something that has become mainstream in their minds. And the conversations that we are having now are very different from the conversations we've had in the past. It's always been a bit more of a small fringe community. Now, you have regulators who are holding events that are focused on crypto, who do cross-border events with other regulators and come together and talk about regulation in crypto, talking about how cross-border settlement, international finance is going to be where crypto fits in that. Conversations that we are having now are no longer with just private players, or even insti guys. We're talking to banks and how banks can get involved in institutional trading, how banks can get involved in crypto as an asset class. So it's no longer something that people speculate with and people just play around with. Banks are starting to recognize, even though on the front they might not say so, banks are starting to see this as a proper asset class, something that will join equities, FX, rates, commodities. Crypto is becoming part of that frame. And this year, in spite of all the blow-ups, very much so, right? The banks are getting involved primarily because their clients are getting involved, right? Big hedge funds, institutional players are all starting to, either they will have one foot in already, or if they were on the sidelines, they're seeing this as the best opportunity to start things. So in spite of the mayhem that we've seen, actually there are a lot of, I would say, green shoots, right? For lack of a better word, green shoots that we see emerging in the space. And for us, particularly in trading and institutional trading, we've seen a lot of this.
Do you see a consolidation of sorts then as the next potential step? The reason why I ask is that if you look at any vertical in the space which we are in, DeFi, NFTs, trading, there are a lot of players, right? How many exchanges are there in the world? Like even if you say semi-legitimate, there are like 500, 600 exchanges anywhere in the world.
Yeah, I mean, with exchanges, the consolidation is very obvious, right? Binance is emerging as the dominant king of exchanges, where we've seen FTX volumes drop and we've seen Binance go up. But at the same time, it gets more difficult, right? So I actually met CZ after the FTX collapse, and he was saying that he understands that with FTX going down, his business has grown, both internationally and regionally. But he also recognizes there's a bigger target on his back. So while there's consolidation and there's better business for a big player like Binance, they're also very wary of becoming
What happens if Binance fails?
I hope it doesn't. For what?
Anybody from Binance here, no offense, but what happens if Binance fails?
If Binance fails, it will be a problem, right? Liquidity goes out of the space and a lot of value goes up. But I think Binance will be fine.
Okay.
I'm willing to say that publicly.
Yes.
Yes.
Okay. Right. He said it, not me. Just wanted to be clear. So the thing is that okay. So but I think consolidation is good for the space. I think the space is very very fragmented, right? And I think if you look at what and not to shill, but some of the things which ARK is doing, or even what Bu Zhi DAO is doing, it's about breaking down these barriers, right? Trying to blur the lines, trying to make things. We always like to say Asia works together and everything like that, but come on, guys, it's bullshit. It's a lot harder. It's so fragmented, so many different cultures and everything like that just to deal with, right? Even in Singapore as well. I wanted to also probably pick your brains on something. This adoption and everything like that. What's the real use case that's going to drive the space forward? And we talked about this on the way here as well, which I think you have a very interesting answer. But I also wanted to also cultivate that together with where does all the other verticals then sit? Whether is it DeFi, stables, NFTs, etc.
I mean, if we're honest with ourselves, the main use case of crypto in the last 5 years and the main adoption has been speculation. People get into crypto because they want to make money, right? And this applies across the board. Whether it be trading, stable coins, DeFi, NFTs, everything has been speculatively driven. And it has not just been speculatively driven, it has been pure euphoria, right? Valuations have gone up sky high, and everyone is just chasing FOMO, chasing the next buck. And then nothing wrong with that. It's just it's been the reason why we are where we are today is that not just has it been not only has it been speculatively driven, it was driven by leverage and credit, right? If you have a single party like Three Arrows being able to borrow up to $5-10 billion without any collateral, and then just buying everything, and then you have guys like FTX raising billions of dollars, doubling down and just investing in everything. You get VC valuations going up to the roof and getting into levels that are unheard of, right? So it's been the main adoption has been speculation and trading across the board. But what we're seeing now is that with the credit crisis pulling everything back, we're starting to see who is alive, who is really building, who has real value. And I think this uncovers some of this, right, where the main use cases are sustainable even without credit, even without this speculation. So which are the pieces that are still around? So I mean, in my own opinion, if you look at some main pieces from my perspective, the trading space, credit has died, but derivatives options remain functioning, robust, and remain strong.
How big is it actually?
So I mean, for us, for example, this year we've had record volumes for options. We've traded $35 billion in options. We've seen real adoption from big hedge funds that used to be the biggest names in FX. And not just the company that is pivoting and trading crypto, it's the actual trading teams that used to trade FX. We are trading with them crypto now, right? So same guys, you know. And for them, this is not about. They're not in the space for pure direction. They're here to trade dislocations in the market, you know, to push it forward as a trading asset in the macro space.
And you think that's the most important? Would it be the cornerstone of a potential market recovery?
Not necessarily. Not necessarily. In fact, they would probably prefer if the market continues to be dislocated.
Okay.
The irony of that, right? But another adoption that we've seen is the strength of stablecoins. So in a high interest rate environment, and in an environment where there's not so much focus on credit, actually the stablecoin guys are doing better than ever. Their revenues are higher than ever. You know, very simple business. They push forward payments in stablecoin. They push forward you know, settlements and you know, deposits in stablecoin, and they collect high interest rates. So ironically, the stablecoin industry has probably been doing better than ever, right? You see NFTs that are being used for not just profile pictures, things being used for other use cases as well. Some in the finance use cases, either trade financing or you know, you contract for trading contracts, etc. Right? So you start to see these use cases, things that are able to function and survive without speculation and without credit. Funding is difficult as well. So projects that are able to create revenue and create and actually have a profit, sustainable profit, these are the projects that will survive as well. And every project suddenly is thinking about not just about when am I going to raise my next round, but they're thinking about how do I tweak my business so that it's profitable, right? So I think these are good parts of the space. Of course, would be good under different circumstances, but sometimes we need this reset, right? So I think we are in a 2008 financial crisis plus, you know, yeah, I mean, the 2008 financial crisis plus .com crash combined together kind of moment where you have this big reset, and then the more useful pieces start to emerge as we go along.
Hearing you say that, so basically we need a reset, and we're going through a reset right now.
Right in the middle of it, yeah.
We're right in the middle of it, so that means it's not ending yet.
For me, there are still potentially big pieces that could cause more pain, right? So Genesis Lending is the biggest lender in the space.
Yep.
They still have a $2.8 billion book.
Yep.
So the question for me is, who has exposure to Genesis? Who has exposure to DCG? If that piece comes off, then there's one more round of defaults, right?
Okay.
And then, you know, who survives after that blow? So I think I would say next 6 months will be interesting. And this is CZ's own prediction, which is he felt that before FTX, the space recovers in the second half of 2023. Post FTX, the space starts to recover in 2024. So I'm not sure exactly when it will recover. A lot of it will depend on macroeconomics as well. Because the last time we had a crypto crash like this was in 2019 when Bitcoin went from 20K to 3K. And we had a stunning recovery, right? But that was on the back of the Federal Reserve expanding their balance sheet tremendously. So now we have an even bigger crash, but the Federal Reserve is shrinking their balance sheet. So it might be a little bit longer recovery. But you know, as you know, I think there's a lot of moving pieces, and you know, we're sort of observing where and when these pieces come together. But we are seeing some positivity in the space, so it's not all bearish.
Can you give some examples of positivity? And by the way, after this question as well, does anybody have any questions for Darius or myself? Hopefully for Darius as well. We'll come to you shortly in a bit. But yes, what do I want to ask? Shit.
Yeah, you said, and where are the green shoots? So the green shoots are that I think 2020.
Are they on the protocol level, or are you talking about
both?
Okay.
So I mean, on the trading level, 2022 for me was the year where we see real institutional adoption, because I mean, let me give you an example, right? In August, into the ETH merge, we saw one of the biggest ever names in traditional finance do half of the entire Ether options volume on Deribit. A single name, single fund, right? If you have a few more of these guys and they are coming in, the option space multiplies immediately. So that's on the trading side. On the DeFi side, with the speculation washed away, we are seeing, and with the problems with centralized exchanges, we are seeing people suddenly look at DeFi as, okay, this is a real use case authentically because it's a trustless system. Suddenly, trustless becomes not just something you say, but something that you actually, that applies to you, right? So in personal finance, I think that becomes a very big thing, where DeFi becomes a layer, where people can very comfortably manage their personal finances. There are many more examples, but maybe let's open it up.
I just got a QCP notification, by the way. Yeah, I will update. Okay. We've still got about 15 minutes left, but I just wanted to just take a pause. I think there's a lot to take in, what Darius has just shared with us, and appreciate it, bro. But anybody's got any questions, anything? Anybody's got anything? I think somebody, you raise your hand. A couple of people raise their hand. Do we have mics for them? If not, I can just, pass them this. Oh, okay. Okay. So the gentleman first, and then I think the lady in the jacket behind it. Can you just introduce yourself and what you do as well? So we have some context, just in case, we want to chat with you after.
All right, sure.
Hi,
thanks for the interesting discussion, by the way. I'm Casper. I CTO at Red Curry. We do a real-world asset-backed token, a means of payment. So backing it by commercial real estate. My question is, so Vitalik published this post recently about what he's most excited about in blockchain after the merge. And he mentioned about money and also DeFi, so keeping it simple and doing simple DeFi solutions. Now, either out of these two, breaking it down, or something third, what are you most excited about blockchain going into this recovery period of end of year or maybe next year, then 2023 or 2024? Yeah, thanks.
I think he's looking at you.
Yeah, I think for us, I think we've seen multiple cycles of the space, and after every cycle, the space gets a bit stronger. I don't think it'll be any different this round, right? So for us as traders, we see the most exciting thing for us is the derivatives market growing, because just very specific for us, because for a lot of institutional players, they look at crypto and they don't understand what the hell they're seeing, right? They're NFTs and DeFi. But for them, the derivative space is the same market structure with a different underlying. So I think to me that builds one of the big cornerstones where you have a lot of money flowing in from traditional finance, and that's a piece where once the space has money, and you manage the credit better, maybe the banks step in to manage interest rates and manage the borrowing and lending, and then you start to see this multiplier applying the space again. Then you start to see proper use cases being able to raise good money, and the cycle repeats. So I think we start to see the next cycle happen again on the back of some of these inflows and capital inflows and proper management of credit. Hope that answers your question.
Thank you. Next one.
So, hi everyone. My name is Flora. Well, first off, thank you so much for the really insightful discussion. I've definitely enjoyed it, Gabriel and both Darius. So, hi again. My name is Flora. I'm the chief of staff at Airfoil, which is a Web3 design, product, and engineering company. We're also based in Singapore, so I know some ARC people. And my question. Nice. Yeah. My question was, which consumer use cases do you think will drive mass adoption? So we've touched upon things like, community gate-kept NFTs. Like, for example, our office in Singapore actually uses an NFT to enter the office. But I'm more curious, on the digital product side, what do you think will be driving mass adoption for mainstream users?
Curious question. What happens to the NFT if they quit?
They probably have to burn it. I'm not really sure.
Yeah, no, it's good because one thing ARC does is that so we've got two layers of NFTs. The first one is a Pixis, which is soul bound to your MetaMask. So you're from Singapore, right? So it's kind of like a SingPass, so it's your personal identity. And then the second one is a Stellar, which essentially gives you the benefits that comes with the membership, which we do for a community. Yeah, so it's like something like what you just mentioned was something we were thinking about. Anyway, I digress. But yes, you want to take that?
No, I think it's very simple, right? Payments is one big one. I still believe that, we still see, from the very start of QCP in 2017 to now, we've still been using the same payment structures where stable coins actually localize transfers, meaning that if I want to send money from Indonesia to China, instead of having to go to a bank and doing cross-border, I do a domestic a domestic transfer and it goes in a stablecoin, and then the transaction and settlement is done in stablecoin cross-border. A 3-day affair becomes a 5-minute, very painless affair. So it domesticates payments. I think that use case starts to expand as the banks get involved as well.
Actually, if you think about it, that's how we became friends.
That's true.
Actually, that's true.
Yeah,
that's true.
yeah.
So just to use the real case, right? So basically, when I used to do crypto conferences, and then obviously sponsors would pay us in crypto and everything. First and foremost, we needed a way to put the revenue on record. Second thing as well is that events. If you look at this space, right, none of this is paid in Bitcoin, for example. It's paid in Taiwan dollars, US dollars, whatever it is, right? And the reason Darius and I got in touch in the first place was because literally on TT charges and everything like that, we were spending upwards of 10,000 Singapore dollars, which is about 7,500 US. Might change about there and thereabouts. Yeah. So literally we were paying like depending on which part of the world you are, 2 to 3 people's salary just on FX rates, TT transfers, Swift, blah 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 blah, everything like that. Right, excluding money that gets lost when I send to a US bank and everything like that, right? So the reason we did it was that KCP first started as an OTC desk, right? So that's how we actually used to basically convert. People send us ETH, people send us Bitcoin, convert it immediately into fiat, and then after that, do the paperwork and to get it into our bank account as quickly as possible. So yeah.
So I always say that the irony of the crypto space is that the banks are extremely important. And I think one of the most important adoptions here and use cases is that the banks are starting to see it as a use case, and the banks are starting to see it as a tool for their own business expansion. So that's one. Personal finance and management in DeFi is an important one as well, where retail guys no longer need to pay high fees and face a lot of friction through the banks. They're able to move money themselves and to manage their personal finances on DeFi in a trustless manner. And of course, you have NFTs, which on the more entertainment side, more community side, NFTs, NFT communities. These are important pieces as well, to bring. But at the heart of it, it also flows back into the trading element, the trade finance trading element. And I think as long as that remains stable, it sort of pushes capital and moves the economies of the rest of the pieces around.
No pressure on you. Basically.
Not at all.
Not at all. Time's almost up, but I saw somebody raise his hand. He was like, vigorously waving. So we'll take that question and we'll close it off and everything. Thank you very much.
Hey, my name is Jay Wu, co-founder at Rosetto, a community-led Web3 research platform. Thanks for this great conversation. My question is for Darius. After what you said this year, quote unquote, everything that could went wrong. We saw some alt tokens drop in value by, let's say, 80%, 90%, or disappear altogether. But, there's the famous saying by Warren Buffett, be greedy when others are fearful. Do you see any value in some of these alt tokens, or do you think we're still catching a falling knife?
I wouldn't use that adage in this scenario, because let me explain why. When Luna went from top 10 coin to 0, I think it created a fundamental question, right? Is the token model still applicable in its current form? The fact that Luna could go to 0 tells you that the speculative value of it is a lot higher than we thought. Everyone used to assume that there's a nice, fundamental utility layer to it, and then there's a speculative layer that comes off. But now, to me and for us as on the VC side, we are starting to question the token model altogether. How does a token create value accrual? So I can be a token holder, and if the project makes money, I don't get the money, right? How does the value accrue to the token? Ironically, we're looking back to the stock and equity model where you have dividends that flow back to the owner, right? In this case, you have a bifurcated model where the token might just retain value without benefiting you. So the question for all token projects is, how do you create this value accrual system and create a positive feedback loop that benefits a token buyer rather than just rely entirely on speculation? I don't think we have the answer for that yet.
Which also doesn't end up being a security as well, because I think one of the reasons you can't, for a token model and token accrual as well, is that because you can't give dividends, but if you do give dividends, it becomes a security and everything like that, and all of us would be having coffee with Gary Gensler one way or the other.
Yeah, so ironically, we're trying to sort of replicate the equity model without being a security. So the question remains for me is that, going forward, how does the token model evolve and change so that the value accrual is causes a brings value to the token buyer. So I think when we solve that, we start to see the token market start to revive. But until we solve that, it's going to be very difficult for people to put big amounts in tokens.
Okay, I think that's it. If you want to follow up everything he just said and everything, one piece of advice, you go to Telegram, there's this QCP broadcast. How can you get it? I think that's probably the last year.
Yeah, I'll put it up or something.
Yeah, okay, can. Yeah, so basically, Darius, thank you very much.
Thank you.
Thank you, everybody.